All right, so screw the W-2, right? What does that actually mean, right? Actually leaving your job behind. It's amazing. Oh, it's always amazing to me that somewhere around 65% of people don't like their jobs. They don't like their
Mhm.
managers. They don't like doing what they do. And so, how is it possible to leave a job, whether you're interested in being a passive investor and just receiving cash flow, or as we talk about on this show, the Mailbox Money Show, receiving that mailbox money, or being more active? Is it possible? Is it possible through real estate? Well, I would say absolutely it is possible. I have done it. My guest today, John Rickgarn, has done it. And so really excited to have you, John, talking about screwing the W-2, being able to go after what you are here to do on this earth, and really, spending time with family and living out your values, and just where you get to, money works for you rather than you having to work for money. So how's it going today, John?
Not too bad. Yeah. Thanks for having me on the podcast, Bronson. Appreciate it.
I love it. It feels like kind of like a half offensive title, like screw the W-2, man. Like that's
Well,
like,
I don't know. I don't even know how I came up with it. I started like a little, minor hashtag movement, but that's like, well, it rhymes. And that was kind of my thoughts when I left my W-2 job. It's like, screw this. And
yeah, that's great. And I love you have this new show, and you also have another show, the podcast, which is what's the name of the podcast again?
The podcast is the Wealth and Freedom Nexus. It's also connected with my website. But yeah, I started a separate YouTube show, hashtag Screw the W-2, where every Saturday interview comes out where I've interviewed, business owners, entrepreneurs, early retirees, just anyone that's basically just said, screw the W-2 lifestyle.
Yeah, that's awesome. And I was actually had the chance to be on the show
Yeah.
recently, and it was great. It was a great conversation just on how that actually happens. And
Mhm.
and I think it's something, I don't know. I realized there was a great transformation that happened when I was able to even I was getting paid well, working 20, 30 hours a
Mhm.
week, but I was able to leave. And I just had this incredible sense of like, I mean, kind of like a okay, I hope this works out, kind of thing. Like I hope I'm gonna have
Yep.
to go back. But I always figured, like, if it doesn't work out in real estate, I can always go back and go find another, job in the field,
Mhm.
whatever. But a lot of times I think we can kind of catastrophize and kind of say, oh my gosh, well, what if it doesn't work? Or make it almost that it becomes our identity. If somehow we were to
Mhm.
fail, then that means that we're a failure. Do you feel like that's a big problem a lot of people face when it comes to trying to leave their job? Is they're just like, they just have no map for it, or maybe there's nobody in their life that's done it? Or for me, I know a lot of people, like my whole friends and family, they were all like, you're crazy. Why would you leave your job? You're making 200K a year. You're working 20, 30 hours a week. Like, why would you do that?
Yeah.
And, just talk to me a little bit about that process most people go through.
Yeah, I think for I don't know. I mean, I can't speak for everyone. I think there's a lot of fear out there, kind of like you alluded to. What if I fail? What if this falls flat? What if my business implodes? Whatever. And I don't know if we're just hardwired for that or if society kind of pushes it, but it's like, so many people don't think of the positives. It's like, hey, what if this takes off? What if I make more money than I was at my W-2 job? What if I have more time freedom? What if this works out great? I mean, I think we're just all tied down to the negative parts. And, I'll admit I kind of had those same things. And originally I was actually going to leave my job at the end of 2018. And for a variety of reasons, I actually stuck it out about another 9 months. It was supposed to be 10, but that's a whole nother story as well.
Mm. Yeah. Now for you, what was your background? What did you do before?
So I actually spent 12 years in office equipment sales. That was my previous W-2 job. And I mean, there were days I, would work, 10, 12 hours a day. I'd be on the road 100, 250 miles a day. And, after a while, it really just kind of grinds you both mentally and physically.
Yeah, no, it is. It can be a grind. I mean, my experience, I really, same with you. I wanted to leave. It was like I was going to leave 2020 right before COVID. Then COVID happened. Then I got really angry because COVID happened. I was like, I can't leave. And I just felt like I couldn't leave at
Yeah.
that point. But then it actually was kind of a blessing because I was able to kind of work remotely. We weren't even really selling, but I was just creating all this
Mhm.
stuff. And then it was about a year and a half later, I left. But I remember sitting at this spot right here. I shared this on your show that like, I had this moment where I was thinking about the month end, quarter end, particularly if you're in sales, because sales is
Yeah.
kind of like there's kind of an intermediate, right? You have like a go work a desk job somewhere, and then you've got sales is kind of maybe in the middle, where especially if you're outside sales, you don't really,
Mhm.
you kind of go into business to business sales, and then entrepreneurship's kind of over here. So I had some autonomy, but still, I just didn't have I had those calls coming in from my manager of like, hey, how's it going? What do you got in the pipeline here?
Yep.
How's it going at the end of the month? Or so like it was like the end of September, a couple months after I left my job, and I just remember thinking like, thank God I'm not doing that job anymore. Cause like, I'm just
Uh-huh.
so glad I don't have to like, I answer to investors. I answer, I have my own goals and I have people around and, and I have accountability partners and things, but I don't have to answer to a boss anymore. It's like, I don't have
Hmm.
to, I can kind of pick and choose what I want to do. And if I want to take a week and go to Barcelona, like I'll go to Barcelona. Like I can kind of pick and choose what I want to do, which is amazing. And a lot of people don't realize like having time freedom is really a big part of wealth. But
Hmm.
talk to us a little bit more about like your reasons for wanting to quit your job. I mean, what were some of the reasons for you?
There was I don't know, probably several reasons. The biggest thing, I mean, you kind of already mentioned it, was just time freedom. And at the peak, to give you an idea, I covered a territory that, from if I drove from the far west point to the far east point, it was about a 4 hour drive, just to give you a visual.
Wow.
And I mean, there'd be times I, left the home at 6 in the morning, got back at 6 at night, had supper, pulled out the laptop, worked on proposals, sent out emails, and sometimes did that to 10 o'clock at night. And yeah, the money's good, but then, it just gets to the point of, all I'm doing is working. I don't really have any free time. I mean,
All right.
at the time I was just married. I wasn't a father at that point, but it was just kind of, slowly, yeah, the money's good, but it gets to the point of, okay, there's got to be more to life than this.
Yeah, absolutely. Yeah. And it's the whole thing that, I think as Americans, we work more like than any
Mhm.
other country, just about. I mean, I think they did a study just worldwide and they found that Americans work, they only take, as far as days off with sick time or vacation, on average, we take 13 days off a
Yeah.
year. And the average Italian, do you know what the average Italian takes off per year?
I'm guessing about 5 weeks, maybe more.
Well, yeah, the average, this is just the average. The average Italian takes 42 working days off a year. So if you
Wow.
kind of like 5-day work weeks, that's 8.5 weeks of work on
Hmm.
average. So that's the average. So that's just,
Exactly.
I just thought that was
Yeah.
insane. I was like, oh my gosh, we're doing it wrong, whatever. But,
Hmm.
but then I've realized that this whole, the life deferred plan, right? Like
Yeah.
I'm gonna do this, then I'm gonna retire and I'm gonna just live the life I want. I was like, it's kind of a myth because a lot of people, they retire young and then they just get to a place where they travel, they do what they're gonna do, and then they have no purpose. They have no sense
Yeah.
of purpose in their life. So to me, like I want to be, I want to live to be 100. I want to be working, like doing things that I enjoy and I like, and also taking time and doing the things that, doing the trips. I had 5 international
Hmm.
trips this year so far. I've got a 6 month coming up to go to Patagonia and Chile. Like it's awesome. So I love it.
Wow.
Yeah, so I'm excited. But so for you, like let's talk a little bit more about I know it seems like it's a passion of yours as well, but for you, I know you work with investors. Have you seen
Mhm.
any investors that have been able to do this passively, that are more like maybe they're high earners, like doctors, or people that own their own businesses, and they've been able to invest passively enough to where it's been able to maybe not replace their income, but it's been able to replace their expenses? Because I think that's kind of the most basic form of financial freedom.
Mhm.
Have you seen anybody that's been able to do that successfully?
I'd say kind of a mix. Generally, and I'm, just kind of speaking to my own network. It isn't so much, high end earners, doctors, lawyers, whatever, and then investing passively. It's I don't know, maybe for lack of a better term, it's more of gig workers where, I got a friend that he owns, let's see, four restaurants in town. He has a number of rentals. He actually does day trading.
Okay.
He's, just very flexible, can kind of work when he wants. And for him, that actually works great because he actually has a special needs child and was able to be there for his family. Where if he was working, 40, 50, 60 hours a week, obviously that wouldn't, work out very well. So,
Yeah, yeah. So he's able to live the life he wants to live, and that's another way to
mhm.
look at it too. Is that you build your streams of passive income. I have a friend named Rudy, who I had on this show, the Mailbox Money Show, and he has 20 streams of passive income, and
Wow.
he's trying to get 50, and it's everything from like kind of little side businesses and hustles and things. I mean, some of them are semi-passive, and then some are fully
Hmm.
passive. And he'll like buy a shipping container. This was before COVID when they were shortage, but he'll like rent it out for $100 a month or whatever. And it's like,
Wow.
just get them for $2,000 and rent it out for $100 or $150. And so he'll just find ways to like just create value. And so I
Hmm.
love that. I think that's really awesome. Um, so for you, talk to us a little bit about, kind of methods. If someone's looking to get started in passive investing in real estate or other sorts of assets, what are some of the first things they need to know? Because again, before you can leave your job, you
Hmm.
have to become comfortable that like, okay, there's some other way that I can replace my income or or
Mhm.
even my expenses. And so, yeah, what are some ways people kind of get started in this or, yeah.
So I'll kind of, give you my experience where I was very methodical where I started investing back in 2016. And, you mentioned this, I have, long-term rentals, short-term rentals, my Amazon affiliates account, just to name a few. But I've always been of the belief of trying to find financial freedom one bill at a time, because I think so many people, pick your number, 5,000 a month, 10,000 a month, whatever, that's the amount of passive income I need to get. And I think so many people just get hung up on that. It's like, oh, I'll never make that. That's too high of a bar to reach, unattainable, etc. It's like, well, let's break that up a little bit. I always half joking, but more serious, is everyone seems to have a Netflix account. You're looking at what, $10 a month. Well, I think $10 a month for the basic plan now. So I just kind of, mentioned to a lot of my friends, and some of them have done this too, where, all right, let's just start with your Netflix subscription. What can you do that generates, $10 a month for income? And that might be, some dividend stocks. That might be passive investment through Fundrise or Realty Mogul, just to name a few. Nothing big, but again, we're only talking $10 a month. And all right, once you have that $10 income stream pays that bill, what's your next bill? That's an expense that comes up every month, and just kind of work from there. And that's how I've just done this for the last 6 years, of everything from our natural gas bill to our term insurance bills, car insurance, home insurance. So just kind of keep stacking it up with passive income.
That's a great way to look at it, too. And I think a lot of people think, because even for me, when I was, making 200K a year, it was like, that was a harder number to replace than the actual, just what bills do I have coming in? What's my
Mhm.
minimum viable, like I can live sustainably on this amount. I realized like I live pretty simply that, at 50, 60K a year, I could live a decent life and travel and do other things I
Mhm.
wanted to do. And that was kind of like the rat race number, right? And so once
Yeah.
I could start replacing those expenses, okay, this expense or, this income covers this expense and kind of just gets me where I need to go. And as an entrepreneur, it's interesting in this business with syndication, because we've raised about 30 million now. We'll have deals and I'll have, literally I'll spend 30 grand over 3 to 5 months, and then I'll have like no money coming in. And all of a sudden I'll have like some big lump sum of like 100K or 200K to come to the account. I
Right.
was like, oh, we sold this deal or had this acquisition, or something will happen. But
Mhm.
having cash flow is really amazing because it provides that baseline. And the more different types of deals I'm in, the more my cash flow grows, which is great. Of course, I'm doing it more actively, but there are people that do it passively as well. So, what are some ways? Like you said, Fundrise is one. People obviously syndication. People can invest
Mhm.
50 or 100K. Have you found any other assets that you like that are maybe around real estate or some other topics that are kind of around that you?
Sure. Well, and maybe the one I'll highlight that I actually did very well on for numerous years was a peer-to-peer lending platform, Lending Club.
Right.
Unfortunately, they phased out their program, but there's a few out there where you can start with just as $25, and then you're a partial owner of basically a promissory note, and then you get paid interest and partial principal every single month. I ended up getting to the point where I would just pay the minimum, or I would actually do a 0% balance transfers on my credit cards, for like 18 months, put that cash in the Lending Club, pay the minimum payment, then would just keep rolling that up. That was actually one little avenue I had before I left my W-2, is I had about $1,000 a month coming in just from that stream of income. Again, unfortunately, they've uh, I want to say petered out, but they've closed down that program as of 2020. So it's kind of in drawdown mode. But that was a nice little, passive income stream that I had that I built up before I left my W-2 job as well.
Yeah, no, that's awesome. I was thinking about just different things that, to develop passive cash flow. Our ATM machine fund is an awesome thing
Hmm.
that I used to get into. But one way that I got into it, and again, I'm not giving anybody specific financial advice, but for me,
Sure.
taking out lower debt that's fixed for a long term at a low
Hmm.
rate. I don't know if this exists anymore, but in California and Florida, there was a bank that did this personal line of credit. If you'd come over and bring a business account or a personal account over, and it was 100K at 2.75% interest
Wow.
only for the first 2 years. So the last
Okay.
8 years are fixed. So like I was able to take all the money and just invest it in cash
Yeah.
flowing things. And I was like, there's a
Good old
spread on that, right?
arbitrage.
So able to make some money. Yeah, a little arbitrage. So that was super, super helpful to get into some deals and do some things with that. So I love, there are opportunities out there. They say, Warren Buffett, he talks about the idea of just finding value, right? Creating and finding
Mhm.
value. And a lot of the people that only believe that the market is efficient, meaning there's no real deals out there. Of course, if you're in real estate, it's hard to believe nothing's because it's like the most inefficient thing ever. But
Exactly.
like this efficient market theory that's like, oh, if you see a $20 bill and you're on a walk and you see a $20 bill on the ground, if you were efficient market, you say, well, if it was really a $20 bill, it wouldn't be on the ground, right? Like, it's not even there.
I never
Versus
thought of
like,
that analogy.
but it's true. It's just finding the value and finding, I don't want to say free money, but getting things where you can see the value, where you're seeing, okay, I'm
Mhm.
borrowing at this cost and I'm putting it here, or I'm seeing inflation is this. Well, how can I hedge inflation and also
Yeah.
pay off? Are you seeing, yeah, I guess with inflation, are you seeing some of those expenses you've had go up, or do you have some of these things that you've invested in, they've also kind of have an inflation hedged element to them as well?
Yeah, I mean, it's kind of both ways. I mean, obviously, like all my investment properties have fixed rate interest debt on them that are, 4.5 to 2.5% interest rate. And obviously that's fixed for the term of the loan. But then, some things like property insurance, taxes obviously go up. But then, with my real estate, across the board, every single one of our units bumped up anywhere from 15 to $25 actually, excuse me, $50 a month, bumped up in monthly rents. So yes, there's the expenses that go up, but the income can, I don't want to say easily, but is very inflation resistant, shall we say?
Yeah, yeah. Well, let's talk about that too, because I know a lot of people are, at least at the time of recording this, people are concerned about what's happening with interest rates. If you had
Mhm.
particularly a single family, 6 months, a year ago, you were getting 3% interest rates, and now it's 7%. So that's a
Yeah.
41% or 40% increase in the payment size. We really haven't seen, the price of housing really come down much. But what are you seeing? I mean, how do you feel about real estate? I'm not sure if you're doing, single family, multifamily, but maybe you can just give some thoughts on kind of what you're seeing and how do you think pricing is going to come down? What are you seeing and kind of what you're investing in? Maybe you can kind of talk about the assets you're investing in.
Yeah. So for investing, generally speaking, I'm in single family. The last, multi-unit acquisition I did was a duplex about a year ago. What I've seen, and kind of talking this because one of the many hats that I wear, I'm a licensed realtor in Minnesota as well. So I work with a lot of first-time home buyers and investors too, where a lot of times they have their affordability, like, okay, I can afford 500 a month. Well, like you said, that changes quite a bit when the interest rate goes from 3% to 6.75, which I just had one client's pre-approval letter adjust to that. So I obviously there's a little bit of a price pressure on that. At the same token, I do think we kind of need that a little bit because I think, unfortunately, with lower interest rates, both as an investor and as a homeowner, I don't know. I think people just kind of got a little too greedy and like, oh, look how much more home I can buy on this monthly payment. It's like, well, yeah, but do you really need your first home to have 5 bedrooms, 4 baths, 3-car attached garage? I
And a
mean,
partridge in a pear
exactly.
tree.
So I think there's just a little bit more, realism maybe in the market now where people are kind of tempering their expectations. That said, the other unfortunate side is building has been very depressed the last 10 years nationwide. A lot of class A luxury single family homes have been going up and not a lot of starter homes really too. So it's
Right.
interesting blend, shall we say.
Yeah, yeah, it is interesting. Just seeing how to get involved and seeing stuff changing as far as the market. But I tell people as well. It's like if you can get into things that have a inflation hedge component, or even let's say you can
Mhm.
get like an example I gave, like lower debt on something for a long period of time, as long as it cash flows, you can hold
Yeah.
it forever. If you're negative now, in where I live in California, it's like the house I live in, I rent just because it doesn't make sense to buy. Like I would,
Mhm.
when rates were 3%, my rent's 34.50 for a little 3-bedroom house. but it would be a $1.2 million purchase, right? So I'd have to put,
Jeez.
it'd be, 10% down, so maybe 100, 20K down or something. And then I'd be paying
Yeah.
7K a month. Well, the rate's higher. Now it'd be more like 10K a month. So
Hmm.
it's almost 3 times what it costs to just rent. So,
Exactly.
so I see that as being very risky to buy. I mean, there may be a point where that changes and that differential gets closer, but, it's interesting to see. So yeah, so any other tips that you have for people as far as, kind of like, hey, I'd like to figure out how to leave my job, or just
Mhm.
kind of learn more about this real estate thing and what I could do that maybe even passively wouldn't take up more of my time.
Yeah. I think the first step, and I'd probably mention anyone, and I mean, you kind of mentioned this before, where you were earning $200,000 a year. And I think a lot of people get hung up on the gross amount. And I think if they look at what they're, back to the W-2 statement at the end of the year, and they look at what they made gross versus what actually got deposited in their checking account, I think that'd be kind of an eye opener. It's like, well, okay, I make 200,000, but after taxes, it's, whatever, 100,000, 110,000. Okay, maybe that's a little bit more attainable than the gross number I was chasing. Because a lot of the passive income streams I pursue and invest in, you are not subject to FICA tax. So, there's
Right.
15.2% right there, especially if you're self-employed. Capital gain and dividend rate tax might be 0 to 15% versus I know you're in California, probably 30-40% if not higher.
That's high.
So I think probably the biggest thing is just understand what is your net amount you need to look at, what are your fixed monthly expenses, kind of like you said you have to pay, where food, travel, gas, some of that we can all make some adjustments to that, but our rent, our car payment, whatever the case may be, are pretty much fixed. And then just, break it down. What's your individual expenses? What can you tie into that? I actually have several, again, I'm not giving investment advice either, but I should say partnerships that I've made in a lot of investment platforms that you can start at 10 or $25 a month. And obviously I invested up to $10,000 a month too. And, I think everyone's situation is different, but they can start small and work their way up.
Yeah, no, you brought up a great point too. I think the tax issues, tax piece is important. And normally people have the two buckets. One is the investment bucket over here that, at
Mhm.
least some of this you can reduce or lower taxes. But when it comes to your actual income, that's harder to reduce unless
Mhm.
you find a way to do it. So I realized for me making 200K a year, if I paid no taxes, it'd be more like I could make 140 a year, and that was enough. And so
Yep.
I found a way, being a real estate professional, I pay almost, no taxes. So I went from being a 25% or higher tax rate to, for some of my income to be, about a 1%. And so that was huge. So, right, just finding
Mhm.
out ways that you could actually make less money, but still, make more just by the tax benefits. Um,
Mhm.
well, that's awesome, man. Well, I really appreciate you coming on today. I encourage everybody to check out your show, both your shows, the Wealth Freedom Nexus, as well as the Screw the W2.
Yep,
And
all
I
my
just,
little hashtags there. If
yeah,
you just go
yeah.
W Freedom Nexus, it's on YouTube, iTunes, Instagram, Twitter, and just Google John Rickgarn. I'm not too hard to find.
That's awesome. Well, yeah, I encourage people to reach out to you. I just want to appreciate all the value you're adding to the marketplace, and you're doing it because you really enjoy people. You really enjoy helping folks, and I know you have investments that you do as well. So, is that the best way to reach you? Is on socials, or what's the best way people can reach out if they want to connect with you, John?
Yeah, like I said, you can find me on LinkedIn, Facebook, probably the two easiest. John at wealthandfreedomnexus.com is my email. Like I said, Google me. Interesting fact, there's only 3 Rickgarns in the world, so I'm not too difficult to find.
Wow, there's only 3 Rickarns in the world, like
Y-
with this spelled the way that it's spelled,
Yep.
Rickgarn.
Yeah, my great grandfather immigrated from Germany, changed his name, had an only child. Only child had my dad, my aunt, and my uncle. My uncle had a daughter. My aunt never had kids. Then my dad and my mom just had me. I was an only child. And now I married my wife, and we have a son, Ronald. So there's just 3 of us with the last name.
Yeah, wow. Well, that's amazing. Well, the one and only Rickern, awesome. Good
Yeah.
to, I guess the few and the proud. So great to have you, John. Appreciate you, and I look forward to connecting with you hopefully at an upcoming event. But thanks again for coming on the show today.
Appreciate it. Thanks, Bronson.
All right, so I love talking about this. I love talking about screwing the W-2 so that you can leave, you can do what you want to do. I mean, having freedom of your time is awesome to me. I'm working pretty hard, but I'm doing it because I want to do it. And I do feel like I'm really making an impact in people's lives, and I'm building something that really will be lasting. I'm really building a brand and building hopefully a platform that people can really, connect with, and really that it's something that's, I'm not selling stuff for someone else or another company. I'm doing it for my own brand, which is awesome. So, and I'm able to get involved with causes like fighting human trafficking, which is a big why for me. So I appreciate you taking the time to be here. I have a big ask for you that will take you probably 30 seconds to do. So if you're watching this on YouTube, please, hit the like button. On iTunes in particular, this is where I really could use some help. I only have a few reviews, and I need to get some more reviews here. So if you are getting value from this, if you could go to iTunes and just write a review, I'm actually going to start reading some of these. And this one is from Raptor to Extreme. It says, I'm just going to read, so if you want some free publicity, I'll be happy to read it for you. It says, I met Bronson a year ago at the Real Estate Guy Summit in Belize and have followed him on his journey since. He has a great handle and philosophy when it comes to smart debt, to use inflation to your advantage and invest in real assets that provide cash flow and benefits. So go to it's really easy. I'm just on my phone here, and you just go straight down to Mailbox Money Show, and you can scroll down to where it's the reviews here. I got to get that to a 5-star. So I'm not 5-star. So please go on. It really helps people to find this show. And so if you are getting value from it, I'd really appreciate a review. So write a review, take 30 seconds, and I will read reviews on upcoming episodes just to give you some shout outs as well. So thanks for taking the time to educate yourself. The best investment you make is in your own education. So well done. Look forward to seeing you on the next episode of Mailbox Money.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.